Recording.
Oh, okay. Scott, you're there. Well, you know, that's the beauty of the internet. It still all works. Feel free to take over. I'm muting myself.
Oh, no worries. Yeah, so I guess you already handled the sound check. Let me ask the attendees just a couple quick questions. We like to keep track of the demographics. Go ahead. So if you currently are an active TI subscriber or not, this kind of helps us keep track of who's attending the Trade of the Week webinars. Lets us decide whether to pay more attention to overview or if we should delve into details. I'll leave this open long enough for the majority of you to go ahead and vote. And just about there. Thanks, y'all. So it looks like we have a little majority here of existing subscribers, 61% to 39. And now for those of you who answered yes on the last one, I have a follow-up for you. Those of you who have a subscription, do you have the AI, the odds maker license? It's the same permission. And the AI and the odds maker kind of come together, but the AI functions on its own. It's a one-time, lifetime license, and once you purchase it, whenever you have an active Trade Ideas subscription, you have complete access to our higher-end technology. All right, looks like most of you have voted, so I'll share that out, and it looks like a majority of the existing subscribers do have the newest tech. So for those of you who don't have the AI or who don't have a subscription, do stick around toward the end. We're going to have a nice offer for you. Until then, I'll turn you over to Dan, and I think he's got a good program scheduled for you today. So let's see what goes on, Dan.
Okay, Scott, thank you very much. Will everyone in the question and answer panel just let me know, number one, if my audio is coming through okay, and also if you can see my screen. Okay, fantastic. I want to thank everyone for coming out this evening. It's going to be a great webinar because the Trade of the Week webinar is really focused on something simple about making money, what does it take to do it, and the opportunities that present themselves. So a quick disclaimer, everyone please be aware, Trade Ideas is a software technology provider. We're not a registered investment advisor, and under no circumstances should any of the information that you see in this webinar be construed as registered investment advice. This is for educational purposes and informational purposes only. Again, just a quick note for everyone that is here. Most of you already know what we're doing, but we're creating an artificial intelligence that's meant for the retail, meaning the individual investor. I hate using even the word retail. It's for individuals, and we're going to be transforming the world from day trading to venture capital, where what people who actively invest are doing is not merely just speculating the buys and the sells, but you're in position to make serious money. We're going to, of course, have offers for everyone that attends the webinar, and I love the fact that most of you are subscribers. Again, for those of you that are not, do not worry, because this webinar is really not focused at all on the functionality of Trade Ideas as a platform. Again, Scott will tell you we are a software provider that specializes in artificial intelligence and big data processing. We connect to all the exchanges, process all the data, and look for statistical anomalies. Again, that's the very, very high level. Everyone can tune into various channels. So again, during the day, nothing is stagnant. You're moving from pre-market to social media to volume. Options is a really popular one, and of course, the winners, the earnings, China. There's really something for everyone, and it takes literally nothing to get started. But today, again, we are here for the Trade of the Week. So the reason I even brought up the artificial intelligence is, well, artificial intelligence, you can't just really say, hey, go make money. It's a funny, a lot of people don't think about how do you ask the question to, a computer to make money. Well, let me explain. And again, I think the interesting part about this is when I say it to myself, it really makes it kind of all clear. The only way you can do it is kind of to go back in time and see, you know, what would have happened had you been doing something. Okay, so we ask our AI to go back in time and look at when stocks that, you know, behaved in this way, where they came down and then started bouncing. Tell us, does that kind of pattern lend itself to continuation? And when it does, how often and what can I expect? Although that may sound simple to you, that's not at all what's being done in financial technology anywhere else. In other words, we're the only people that ask this question this way. And that's primarily because for the vast majority of time, everyone's been fed the same diet of trade station-y technical analysis stuff. Like, you're looking for a fib retracement versus you're looking to get in for a certain amount of time and get out and make a certain amount of profits. It's really bizarre, but bottom line, the trade of the week rhythm forms that turning around and lend themselves to very kind of rough. So, like, if you notice this move right here, you will notice, and by the way, I just want to say that impossible to catch almost this kind of stuff, although again, people in our room do it all the time. But I'm not saying that this is like the norm. So please do not assume that, oh, this move, oh, you know, I would have caught it right here. But not at all. This is called a rubber band snapping, like not snapping, but stretching out through various standard deviations. This is what's called a very unusual behavior. Okay. So that's identified by very simple scientific terms, standard deviations. Again, think of yourself as an FBI profiler on that show, Criminal Minds. I use that example all the time. They are profiling a killer, and they're trying to figure out where is he going to be so they can arrest him. We are profiling behavior of a stock. We're trying to figure out, well, when does this behavior match when other times, other things that behaved similarly did X and Y and Z. That's really the gist of it. Okay. So this is what the trade of the week kind of pattern looks like. Okay. Now, it can form in different ways, but I just want to give everyone an example and talk about why, again, I think this webinar is one of the most important I always think Steve and all the other guys on the team who are here, I kind of always believe this is the most important webinar because this is the one where we actually talk about the stocks. Okay. So again, that's really what we're going to be covering, but I just want to kind of everyone who isn't a customer and those of you who are even to understand where we're coming from. So we're modeling behavior. Notice I've never ever did I ask why. Why did this candle occur on MaxPoint Interactive? You see, guys, that knowledge, as it turns out, is not relevant. Okay? Because the why is almost always impossible not only to predict, but it's different at different times. So you probably yourself have seen that a company can beat earnings and gap down, and a company can miss earnings and then gap up. And that has happened very often all the time. I think that's what is that, a double entendre? I shouldn't say very often all the time. Happens very often. Okay? And so the point is the why doesn't matter, it's the profile. Some moves like this, they continue down and behave erratically, but we are not looking for those. We're looking specifically when a move like this is followed by behavior that you're seeing here. Okay? And so a trade of the week kind of algorithm is looking for this kind of move where the stock starts to go up. In this particular case, MaxPoint Interactive, we have an alert that's right here. So let me explain something about, again, what some of the things that you're watching. You're talking a lot about setting up your own FYI limit alerts and tracking how you yourself perform. Partly because the only person that's really going to make any money ever is you, not trade ideas, not a chat room moderator, not anybody else. Eventually, you are the one that has to pull the trigger. One of the best ways to learn how to do that, and this is for everybody here who, again, is relatively new to investing. I'm sure you've heard the term paper trading. So paper trading is when you basically practice what you would then want to do in real time. One of the problems today with paper trading is that paper trading forces you to trade during market hours. Okay? And it's not really tied to anything. Paper trading assumes that you're sitting there in front of the computer and you're going to be always ready to trade. But Trade Ideas kind of took a completely different approach. We tied in paper trading to your own limit FYI so that we can really let you say that everything that you make, like this alert that I have right here, 180 for max point interactive to get long. So I was looking for this to come back up to this price right here. So whenever you see this in red, okay, that means that it has not been triggered. And obviously, the only way for it not to have been triggered is to be below it and then ready to come up. So whenever you see a red line, that means it's working. It means that I have not come to this point yet. And this is one of the things that I'm trying to show you and again, this is extremely this version of it. What that means is this list is all the things that I'm looking for, but that have not happened yet, but they're setting up in trade of the week type examples. So there's a couple of ways to do this. Number one, for everyone who is not a Trade Ideas customer, please just jot down the symbols. You know, this is one of the ways that we give back. I want to show you today, at least, the things that are setting up, and you can at least know the symbols, do what you need to do, and then figure out if there's any way for you to take advantage. For my good people, the Trade Ideas customers who have access to all the higher end functionality, which is the limit alerts, and you'll see why it is a higher end functionality. I will share all of this with you, as I've mentioned in the previous webinar. But what's kind of nice is today we're also going to be adding to it. So we're going to be looking at what I'm doing, sharing it with everybody, and adding to it in real time. Okay. So the first one, so one of the ways, here's what's really kind of cool. So with Trade Ideas Limit Alerts, there's this column that's called Dollar Firm Alert. So what this does is, I have an alert for MXPT, and this is sorted by stocks that are the closest to the alert, but that have not hit yet. Again, it's super cool. It's like what's approaching your own targets. So I'm showing them to you in that order, but I just want you to know that you can sort by that. So here, there's a bad print that makes this one all weird, but the idea is here's ones that are the farthest away. So here I'm waiting for a pullback on CPXX. I have several alerts on this one, and again, one of them was caught early here, but so I'm $8 away from that pullback. So let's go back to the MXPT, which is 8 cents away. So now, let me right here. Okay, so red, 8 cents away. Next one, Pandora. Okay, let's talk about again what made the Trade Ideas algorithm, signal that this one could be setting up. Okay, number one, believe it or not, this kind of volatility, I mean, as long as you weren't the one holding the stock right here, this incredibly large gap down is something that the AI hunts for, because we like volatility. Volatility means that there's a lot of emotion, and emotion creates momentum. Emotion creates momentum. It's a very important thing to understand. In essence, that's why people look for volume. But it's a little bit tricky. It's not always that simple. But you can visually kind of see everything together. Look at that huge gap down. Then it's trying another gap down, trying, and then a big gap up, and then just an annihilation. You know, it's like here you can feel people giving up, okay? And they're continuing to give up and continuing to give up. And I mean, imagine like you're watching ER, right, or some sort of medical show. You can almost see this as a patient, you know, and here there's like a little bit of life, but then like he's almost flatlining. They're like trying to say, wait, is he dead? But then like heartbeat, no, wait a minute, he's dead. Heartbeat, wait, we got a pulse. It's coming. I mean, literally, that's what's happening, right? At least I'm kind of giving you the sort of hopefully expert entertainment version of the actual emotional pain that people go through. But here's it. So it makes a high. I don't usually always like to chase highs unless like you see like right here where you have this area right here, then it comes down, and when it breaks out through there, I do look for that. Because again, that was an area that, well, you know, there was some emotion here. So you profile that. But here again, it breaks out, but I set this up on a comeback. So I'm looking, I'm sorry, I set this up once I knew that it had, so it had bottomed right here, tried to go up again, came back down, and when it hit support, that's when we put in this new alert right here, 996. And again, notice what, oops, let me change that. So just so everyone sees, so this is the daily view, and this is the intraday view. I always like to look at the big picture more because I really want everyone to kind of understand that this is really much more important than this specifically. And you can kind of at least know where you're coming from. If you're, you know, if you're kind of just like right here, you miss a lot. And think about this, right? Is it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days, which one would say, have you ever held the stock 14 days? Many people don't do that here. But my point being is when we're looking at profiling and behavior, and when we're teaching our artificial intelligence, we're looking at the bigger picture, because the bigger picture is just much more revealing. You know, you have to understand what you can anticipate. Again, just like the profile. So in this particular case, visually, very simply, we looked at the lower channel and set ourselves an alert above. That means that everybody here who is battling is going to give up, and it's going to chase right here, which again starts putting it right above this level, which means there could be a test to here and then a run. So again, we have a limit alert for Pandora, and the price is $9.85. Where is it? That's the limit. That's our alert price, and it's 11 cents away at $9.74. So $9.96, $9.74. Okay. So that's the one for Pandora. Let's look at the next one, MNGA. So again, there's just different ways to approach different things. And what I want everyone to see here is, number one, small investors, which is all of you, unless there's some couple of billionaires hiding, and in that case it's fine too, because we're going to talk a little bit about bigger investors and small cap stocks. But somebody may say, how would you trade a stock? It's only traded 189,000 shares. Well, listen, are you buying 10,000 shares of it? You know, I mean, some people do, and that's okay. You can still trade around 10,000 shares in a stock like this. But the point is that what you're looking here more is percentage type moves, and look at the volatility. So this is, again, some of the things that we hunt. The reason this it has an alert on it is because you see these huge volume moves that created this volatility right here. From 250 to, you know, 122, 112, we are talking about swinging hundreds of percent. And by the way, you know, if you throw down, you know, 2,000 shares, put in $2,000 worth and make 100%, which is the game you're playing with these stocks, I mean, there's nothing wrong with that kind of paycheck. And again, individual investors, the new venture capitalists, we hunt for that. So that is why you see this alert. Okay. Next, VSTM. Okay. So remember, one of the things that I want to show the, every customer, at least. Again, the non-customers, you can learn this later, but for the customers, guys, notice I have a layout, and I'll share this particular layout with you. It's a one-pager, you know, and I just want to say that what I really like here, okay, is the really quick way that I can go from just a complete idea, right, and again, notice all exhibiting the kind of pattern we want. But look, then you can really quickly just, you know, Mike C was talking about, well, or maybe Carl. Yeah, Carl might have been asking, are fundamentals relevant? Yes and no. That's the problem, okay? The question is, are they relevant to you? That's the real question that you need to be asking. So for me, personally, as a alpha hunter, as a FBI profiler, you know, as a professional, I look for a certain type of profile, although I understand that anything can happen anywhere, and I'll explain what I mean by that. So if you look at this one, CRZO, and again, one of the reasons why I picked it out is it's in this AI staging window called the trend change lubricant factor, which again, anyone who wants it can have it. The trend change lubricant, as per its name, is looking for a trend change lubricant. But a couple of things. I do want to be able to quickly see some things that might be important to me. Like, for example, the fact that it's got high social activity. I like that. Okay. Losing money. I think every single oil stock is losing money right now because of the oil prices. They, you know, had earnings. You know, I see this decline in quarterly revenues, but so now you may say, well, what's Dan talking about? Is he like an analyst? No, 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 no. What I'm seeing here is I'm saying, okay, well, this is going up under what looks like shitty conditions, pardon my French. So what that must tell you is like the whole sector is probably going up. Sometimes a rising tide will lift all boats. And that will, and that is, it's going to be important when you, again, take a look at the bigger picture. So let me show you something, again, that I like to do as a professional. And for everybody who is here, who is a Trade Ideas customer, hopefully I'm, again, showing you how to be able to do some things that can help you as well. Let me catch this thing. Come here, you. Oh, dang it. Hold on. Properties. Don't show crosshairs. Okay. Here we go. So I can take a trend line, and I can just put it. Here, I'll start. I mean, you can, again, trend lines are not definitive in any way, shape, or form. So they're, again, they're kind of your own art, right? So I am going to extend this trend line kind of like through here. And what I want to say here is that notice that this is kind of like if you go back over here, you know, or even here, let me go back a little bit further. Here, January, I mean, over a year ago, I mean, you're talking about a relatively long-term trend that's potentially starting to get broken, right? So, but what I can do is I can wait for it to break for real. So I can go right to this line, right-click, create a limit alert, and say broken long-term trend line, and save it. So here's where the, you know, again, this is where I'm saying the break is. And what I'm trying to show here again is that this process, this simple kind of meditative process of going through the names that, again, come up on our lists, and then creating your own markup form, like where do you want to get in it, and also doing it in a way that you can catch both sides. So let me explain. So here, I want this thing to continue higher, even though I'm not in it. And I'm going to say this one called continuing higher. Okay, so that's right there. But I also maybe wanted to kind of, you know, what if it starts to pull back? Okay, so I can say, okay, right here. So what I call this right here is my bracket. So this bracketing allows you to basically be able to catch both directions of an idea that you have. And that's the right philosophical approach, because again, you never really know. You know, it could break out or it could pull back, and you want to be in them for both, but you don't know if it's going to be happening tomorrow or the next day or 3 days from now. But with our limit alerts, it always is there. Okay, so that's one of the, again, the big things that we're going through. So next one, okay, GIGA. This is on my list, and it's 30 cents away. But again, notice what I'm looking for here, and remember that this Trade Ideas Trade of the Week webinar, this is for symbols. I mean, again, I'm talking functionality too with, you know, all the customers here, but I primarily want you to be able to profit from this kind of volatility and its subsequent, you know, statistical coming to Jesus. You know, whether this was real or not. Okay, so Michael Owen said that he lost audio. Is everyone else able to hear me? Just want to make sure that everything's okay.
Yeah, you're all right. There were a few short drop-offs earlier in the presentation, but right now you're okay.
Okay. Yeah, a lot of that might have to do with, again, your individual internet connection. So we do apologize for that if you're having audio issues. So again, I'm showing you setups that I have, and we've also added some. And I kind of also want you to see the process too, that in order to catch these moves, you cannot not be aware of them, and there's no way to know ahead of time. So I want to bring everybody I want to give everyone an example. First of all, okay, again, some of this is a repeat, but again, CPXX. There's a really important lesson here for everyone. So I was going through a webinar with you guys, again, on I think it's on the February 10th or 20th. Let me take a look real quick here. On the 21st of February. And I made a limit alert for CPXS right here because, again, when you look at the longer term picture, I was like, you know, this could be a serious potential breakout. It was, again, I was right over here. And I wanted to see if there was really something that could make this thing potentially go. Again, it just caught my eye because of this kind of trend change. Like, that's a serious trend change from here. So I thought, man, this thing could really, really go. Had no idea about anything, got into it, got out of it like right here, because I was just like, okay, well, obviously I was wrong. Actually, like I said, I think I kept 100 shares because I really wanted to know, well, is it really going to go? You know, like, this is the beauty about these smaller stocks, is that, you know, if you're trading just, you know, a couple hundred shares, which you can, and you can still make huge percentage moves like this. I mean, that, again, that's what we're here for. But it allows you, I mean, you can stay in 200 shares and, you know, and lose a point. That's not going to kill you. That's the difference. I mean, you have to be able to know what hurts and what doesn't. So I got out of it, kept 100 shares, and only, again, I was so disappointed that once I sold it, like here. Once I was able to get out, you know, the news about Steve Cohen came in, and of course subsequently it continued higher. But the point I was trying to make is that even large hedge funds, you know, they speculate in these small caps. And I was talking to someone, again, and the reason I'm repeating the story is because this is so important for you to understand that you can't really think too hard about what and why, because there's so many like things that you never really imagined could be happening that do. Like, for example, Steve Cohen accumulating shares right here, and then possibly, again, possibly, although I don't know, putting out some press that makes the shares go down and buying it all the way through here so that, again, he's getting a good price for his 10% because he doesn't want to be paying up here. He knows that if his name gets out, as soon as it gets out, this thing's going through the roof. So he buys it all at, you know, at these levels because all of these levels were above average volume. And then this whole thing happens. So this is what I'm saying. So now you know the why, but it doesn't help you when you don't know when this price action looks like it's about to go bankrupt. And that's the thing. That's like, think about nirvana or bankruptcy. Isn't that an interesting way to kind of look at this example? I mean, that's what you emotionally have to kind of be able to deal with. And I'm saying I did not, but nor did I need to because you really don't know. And that's the thing, guys. When you don't know, the rules you create make you survive or not survive. And that's what we teach, and that's what we do at Trade Ideas. So every single thing I have here has a reason. And this is, again, not only for the subscribers, but for everyone else who is watching my technique. Notice that every time I look up any stock, whether it's something that I'm not even looking at, like Intel, okay, I know what I should be risking today at any given point in time. Okay? So that's the real key, is you have all the pieces of the puzzle together so that when you make decisions, you really are then able to take advantage of it and not be exposed. So by the way, Intel was another one that we had picked up on the trend change lubricant, and this is, so it's green because it has already hit. Okay, so again, whenever you see something in green, that means that this has already happened. That means that I had set this alert up when Intel was lower and it came through my alert and is going here. And this one I actually have a lot of. I have like 6,000 shares of on the options market. So that's how I'm playing this Intel move. And I really like it because, I mean, again, in my mind, you got to look big picture. You know, it seems like there was a lot of support, and what you look like you're seeing is if we were able to go through here with this, it seems like the intermediate high is going to be testing 37 soon, and then potentially just going for it as they are the biggest, you know, technology player in a technology world. So again, that's just that part of the opinion, but visually, this is what me following my technique is. Okay, so let's go back to another name. Okay, so NWS. This is my bracket for NWS. Okay, so I have two alerts. I have a pullback alert on at 12:03. That's like right here, and I have a breakout alert at 13:10. So I'm ready for both, to play the upside and for a pullback to play the, you know, again, not the downside, but to buy it on the pullback. This volume was very significant. So again, for those of you who are not customers, make sure that you drop this down. So Richard over here is asking, well, how did I choose the 1.6 fine for the GIGA? Okay, great question. Oops. Okay, sorry, that wouldn't be on this chart anyways. It was right here. So I did it visually. Okay, let me explain. There's basically you can do it visually too. Like I could be off by 10 cents easy. The real move could happen right here. It could even happen right here at 154. But for me personally, and this is the beauty of Trade Ideas, this is the area that I want to see it because, and again, this is just my profiling of this case. I want to see it battle through here and then contend with this. Okay, I feel like this could be a resistance and this could be a resistance, so I'm willing to wait for that. So that I chose it personally myself. But that's okay. You know, the idea is that you'll be alerted to it when it happens, and then you've got the risk. You already know. Okay, then you just take a shot. You know, I'm already bringing up names to you that have been sort of pre-filtered. You know, this is what we're doing. This is the way we give back, and also the way we help you become better at what you do. So I have a lot of expertise. Not only am I the CEO, but I do this full-time, and I mean, I invest full-time, I run the company full-time. This is my passion, and what we are obsessed about is creating the better tool for the individual investor. This is me. I am obsessed with doing something that I myself have needed forever since the beginning in 1995 when I started to invest professionally. And professionally meaning for my own account. I'd never managed other people's money. I never wanted to do that. Managing your own money gives you the ultimate freedom. And everybody obviously, hopefully understands that. If you can control your capital through controlling your capital, that is the freedom to do anything and everything that you want to do. Whoops. Maybe I should put my phone on mute. Sorry about that. Okay, so the important thing that I wanted to say is quickly is that don't forget that I am able to make, okay, have something else. There's a really good book. I mean, Malcolm Gladwell is kind of like a pop psychiatrist guru, but he writes some books that are good and easy to follow. One of them is a book called Blink. Have any of you read that book by any chance, or do any of you guys know what it's talking about? Just a quick yes or no, and again, I'm assuming no, but if yes, it's fine too. I'll reiterate it. Anybody? Blink? Okay, so, okay. Amazon, interesting book. Blink is about how we make decisions. Lisa, the name is Blink. Blink, B-L-I-N-K by Malcolm Gladwell. Okay, and it's a great book for investors to read. I mean, I'm completely against investors reading books on technical analysis and all this trade setup. I mean, it's kind of garbagey. And one of the reasons why is that I know, having been an investor all my life, one of the things that's constant is change. There is no setup that works. You can only have an advantage if you are as flexible as the market itself. And obviously the other part is being in it to win it. That's another very important part, and that's why we're here too. In the dot-com era, billions were made on stocks like CMGI that don't exist anymore. And the point is, you know, if you say to yourself, oh, well, this stuff is all crap, it's, you know, fluff and whatever, well, it can be fluff for 6 years, and in those 6 years, the stock can go up 1,000%. Or, again, my best example is, you know, when I was trading actively, I learned to trade Dell Computer, Intel, and Microsoft and Cisco. But had I been smart enough to hold on to them for the 4 years instead of just trading all around them completely all the time, I would have had an extra $30 million. And so what Trade Idea is about isn't the turnover. It's about exposing you to not only high opportunity, high alpha potential setups, but setups that can run. And when they do run, you should not necessarily just exit instantly, or at least consider this. I mean, I got out of my 100 shares at CPXX, although of course I didn't have to. I could see if it can go to 20. But I mean, you're talking about, you know, hundreds of percent, 400% to be exact. Even you can't specifically be greedy. So my whole point is we focus on teaching you both. When you create limit alerts, that's part of you learning to just accept what you feel and go with it. That's one of the best and most important things about investing and trading. Okay? Here's another one, 22nd century group. Okay, this one, if you don't see the big picture, right, you don't know what you're hunting. Look here. Okay, so now hopefully something is making little sense. So here you're basically speculating on death, and I don't care about that. I mean, it can go all the way down to zero. I never short small stocks. But if it breaks through here, again, the potential here is gigantic. It's that simple. Notice I didn't go like, oh, the RSI, fibs, Bollinger number was negative, MAC, forget all that crap. It's just being able to create a rational workflow. I can also then do something like this. You know, let's say we're going for the bankruptcy, right? I'll just put in a bankruptcy bracket right here. Okay, this could be the depth of it. So I got an alert right here. Just in case, I'll pop in 1,000, 5,000 shares right here just to see if there's this bounce. Do you see, guys? I'm not trying to predict anything. I'm preparing for everything. I'm not trying to predict anything. I am preparing for everything. And in this particular case, it's simply knowing where to hunt. Why are we not in GE? Although it is a little nutty. I mean, especially when you look at this stuff, it's very simple. It's money leverage, you know. I mean, I'm in Intel, so again, a part of it is what it is. But you've got to kind of have the GE follows the S&P, so you don't need to really do anything exciting with it. It's never going to be like, you know, these guys that have the kind of volatility that, you know, where you're talking about 300%. So that's why you are watching these names here. So that's okay. So again, I know we have limited time and I want to cover many more. And again, remember, for those of you who are with me, you're going to get this, so don't you worry. Okay, another one. I think I can't remember. There's another one with an M, but MPLX. Did I even? Where the hell did I do? Yeah. Okay. I think I brought this one up. Love this chart. I mean, just love it. And remember, you don't have to be. So remember, I said that that we're basically we're adding stuff to this, right? So here's our breakout, but let's hypothetically have a pullback too. Come to me. Okay, so here's our bracket. You know, if it doesn't go through here and starts pulling back, we're going to buy it right here, and that's it. Very, very simple. Okay, let's keep going down. Okay, what do we got here? Square. Let's see here. So Square is the high-flying IPO, and the CEO of Square is also the CEO of Twitter. So there's some interesting things that you could learn from that. Because the market is doing what it's doing, like if Square goes, even though Twitter and Square are not necessarily related, I will bet you that Twitter, let me zoom in a little bit more here, will kind of start to behave in a similar way. Okay, it does not really ever happen that a guy that's the CEO of both companies is going in opposite directions. So something to consider. I really like these types of areas of congestion. So what I did was, let me see here. So this alert on Twitter, this was already, so because it's green, it means that it had already taken place. Okay, So it had to have come down through, unless I put it in today and it touched it, which is possible. Let me take a look here. It might have touched it. All right, okay, so here, let me take a look. This will answer the question. So this is my triggered alert list. So this is how many points I'm up on all the stops that I've edited and been working on since I started, working with this. And again, notice that I sometimes have different alerts, different things happening in different stops. So let me take a look at where did we go with Twitter. Okay, so Twitter was on the 15th, so it was yesterday. Okay, so I set that up yesterday, so probably that means it touched it. Let me see here. Yeah, it came through, it fell through my support. Yeah, but it came right back to it today. So that's what I'm kind of saying is trading is not an expert science, or art rather. So because I'm drawing these lines, to me, okay, so the way I do this, so I draw this line, it's a call to action. It's like, so I'm making kind of a hypothetical bet with myself. So in the case of Twitter, let me bring it back. Hold on one second. To Twitter. Okay. So in the case of Twitter, I am down 6 cents since it's been triggered. Okay, that means that it was triggered right here, and I'm down 6 cents. You are always aware of what's happening and how you're doing it. Again, I usually have both of these windows together. So again, I know, like, so obviously yesterday at 9 p.m. I drew this this trend line, and Twitter touched it today, but it has since pulled back 8 cents. So again, when I'm working, and I have a dual monitor setup. So when I'm working, like these windows, my triggered alerts and my limit alerts, which are again the ones that are working, are both clearly visible, and I'm working with everything because this is primarily how I utilize and really capture the real power of the rest of our technology, the AI and our limit alerts. Okay, so here let's look at, again, what I want to do now is I want to go over just a couple of other names that that not only were brought to my attention, but that I see just some interesting potential. So here, again, I think I might have mentioned this in the previous webinar, CRZO, again, looking for the bigger move. I wanted to kind of go a little bit further, and remember, these are my eyes, okay? So I'm looking for this congestion, and I want it to show me something. I'm okay with missing this if it can show me something. That's something else that, again, everyone can learn. But you can still do a lot of different things by saying, okay, well, what if it pulls back to here? I could still like it, and I can just call this my oil pullback. Excuse me. So again, the beauty here is you're not confined to one idea. You really aren't. You are able to kind of experiment and expose your own kind of logic and see how does that really relate to the actual market environment. And then obviously, ultimately, the feedback is this. If you're catching points, you know you're doing well. If not, then you know what's going on, and you simply have to readjust what you're doing. But here's the beauty. Since I'm sharing my information, and again, I know people like Carl, and there's a lot of you already have my limits, but they're pretty good. So it's not simply that we want to trade ideas as a company. We're not about just like, hey guys, subscribe and then figure it out and do it. We're about creating a path to success for you, and it's a path that we use ourselves. In a sense, we're like a very high-end trainer for the stars, except we're not that high-end because we don't charge $1,000 per session. We charge, you know, as Scott will show you, $1,500 for the year, which is pretty insane considering all the things that you're able to do. And that's why I'm kind of trying to go through all of this. I'm saying, look at all the things that we're able to do, and then you realizing that you can ride my coattails, or Barry's if he's able to share, or Steve's, or Jamie's, or anybody. Okay? So my world on FIT. So FIT is a stock that I'm also in. Okay, and I've been watching it since this kind of trend change lubricant, where it really started to kind of, again, I've brought it up on in the chat room. Barry knows, you know, we've been talking about it forever, so there are many of you know that I've been in it, I've been talking about it, but the pattern's the same, you know, nothing exciting. I actually tried it over here. I got a little, but then I held it a little too long, and then I got out at a bad time here. Then I was really pissed here because I thought it was going to go. But luckily I wasn't in it, and then it gapped down. I was like, oh my goodness, thank God I got out of it on this up move. And that, by the way, that's okay. All of that is okay if it had continued, right? And if it could have gotten itself out of this area, that probably would have been a lot of tailwind, and it probably could have kept going. Again, it just was not there at the time. But look at what's happening here. Okay, and it was after this move, and it started to go here, that this first move up, and I liked it, and I got into what I call a feeler trade. So feeler trade, guys, this is very important. A lot of people really just don't exactly understand the art of placing an investment, but let's say you're trying to get into 1,000 shares of FIT. Are you really so confident that you got it so perfect that you need all 1,000 shares today? There's kind of like a really nice yogic, stoic practice that a lot of successful traders do called scaling in. And let me explain why it's important and why all of you should try it. It allows you to diffuse all of this emotional energy that you have on winning. So first of all, remember that if you scale in, let's say I'm trying to get 500 shares of Fitbit, and I buy my 500 shares, buy 250 shares right here, okay? It goes further. I don't exactly remember why I set this alert up. It might have been that this was the first one, and then this was the second one coming down. Again, I'll look later. But the point is, I bought my first set of like right around here, and waited the whole, it went up, came all the way back. In the morning, it gapped down, and I was down, and I was pissed. But I wasn't down like that much, like where I had to panic, because I only had 250 shares. See what I'm saying? And then look at where, then I kind of like, because I'm busy and I'm CEOing, and again, I don't want to sound like I'm anything exciting or famous, but I just have to do other stuff other than just invest. But when I came back, I was like, wow, it's right back here, and I bought my other 250 shares right around the same price. And this is with the story that we're at today. Mike, it might have been while I was snowboarding. I'm not trying to be like, the snowboarding stock trading CEO, although that is true. But I'm just showing an example of, so the reason had I been in 1,000 shares, I probably would have exited at a worse price, because I wouldn't have wanted to sit through like $1,200 loser in Fitbit, knowing that any day Citron could drop another bomb on it, And again, that's how your emotions start. That's the voice that says in your head. But then, but when you break it up into 2 days, again, I want to make sure everyone knows, I'm able to break it up in 2 days because I can afford to handle the overnight risk of holding 250 shares of Fitbit at $13.50. That's my personal financial profile. I'm able to do that. If you can't, that's okay. Again, you have to be able to do what you have to do. And we accommodate all of that. But I'm just saying that if you are able to try that scaling in, it's going to help you immensely. Okay? So let's continue working on what we got. Trend change lubricant, another one, Dynegy. Wouldn't we, like a lot of people will tell me, man, I wanted it here. And I say, me too. You know, me too. But that's not, again, that is not the way the AI looked at this picture, and partly that has to do with the bigger picture. Everyone will notice, and you know, guys, I have a sense of humor. This is what I call the inverted FU finger. That's the real pattern right here. You know, technical analysis books are just afraid to say it. That bottoming pattern is called the FU. Two people that are selling right here, when their broker tells them, okay, guys, we really got to get out of Dynegy. Yeah, no, it's time to sell. You know, that's the FU. And the FU is really honed by the knuckles. You got to get a really nice knuckle formation, and then the FU can do what it needs to do. So, why am I bringing up Dynegy on the trend change lubricant? Because again, when we're looking at the big picture, we know that the real action for this, okay, really starts about right here. Okay, it's game time. Okay, so this is me. Remember, the AI kind of serves this up. Lots of heavy, you know, imagine these are waves in an ocean, right? Some turbulent water. It's a good thing I've got a nice surfboard called Holly. You know, but when if this goes through, then all this stuff, this is when the FU really starts to pain people. Okay, there's a lot of emotions that are happening right here. Be a profiler. Don't be a day trader. You know, don't keep drawing pitchforks. You don't need any of that. You can just see it. You know, just zoom out, not in. Look at the big picture. Okay? So that's why Dynegy is on this list, and I really like it. And again, remember, we're talking about long-term stuff too. You know, remember, if Dynegy, look at how your eyes start to like tell you different pictures. If Dynegy starts to really go through here, I mean, you can see a potential move to, like, look at the 19 level, right? From a longer term perspective. It's not really that far away. And this was a big rubber band move right here. Okay? The rubber band is stretching far down. So I'm not predicting anything. This is the thing, guys. I'm not here to predict anything. I'm here to profile. Hey, if you behave this way, then very interesting, I will play. So, and because we're here to give you guys more information, I will bracket you. And I'm going to actually give it a little bit more, say 11. Because again, this is the beauty. You can scale during the day too. Let's say you ultimately want to trade 500 shares of whatever, Fitbit. So buy 250 when you first think you're going to do it, and then wait like half hour. Again, these trades right here that I'm talking to you about, these are not Holly AI trades, but it's a methodology that we also follow with the AI. What I'm saying is that the AI serves us up trades that have this already baked in. So that's the thing. None of us know what will happen tomorrow, but we can prepare ourselves in the best way possible through simple notification, alerting, and then again having ultimately access to technology that also gives you kind of, again, the Sherpa helping hand. All right, guys, I mean, I didn't even give Scott a chance to talk. Man, I talk a lot. Scott, I mean, I think we covered everything. Now we're going to split it right into you. Unless, again, hold on a second. Maybe, are there any other questions? Carl, we're going to create, I'm glad, so Carl's asking us about, can we, a permanent alert window. What we're really working on right now is the TI channel where myself, Brad, Steve, and Barry, and some of the other people's, all their limit alerts are basically, when they trigger, it becomes like a Holly AI trade. So you can follow our triggers in real time the same way you follow the AI. It's going to be amazing. And again, it's really one of the big reasons. Again, guys, we're not in here to be a stock picking service. We're here to change the way people invest forever. I mean, that's how serious we are about it. We have the tech, and we love this space. We're going to have an open house soon, Scott. Should we have something for that?
No, we'll talk about that at another time. Why don't you go ahead and put it on slide 4, actually, about the community, and then we'll roll through those.
Yep.
An important thing to remember about Trade Ideas is you're not out there just using the software on your own. We have a vibrant community. I mean, we have the trading room that's open every day, moderated by Barry Anderson. He's fantastic, and it's a very popular room. It's free. Even if you're not a subscriber, you can find the link in the footer of our website. Office hours, we have a Monday webinar almost every Monday with Jamie Hodge and Steve Gomez, and on Thursdays we have a similar one. It's the Trading Studio. On Wednesdays, earlier today, we have the QA demo session where we go over either new upcoming features or just explain some of the software and then show how it's relevant to what's happening in the market right now and answer questions. So we do a lot to bolster everyone's success. Now, if we go to the next slide, I'll just explain how we are priced. We are a software as a service company, and the core of our service is a monthly subscription. That's $99 a month. It includes all the data, real-time fees for the exchanges. You also get our charting that we added last summer, and you get, very importantly, a free hour of one-on-one training. The first thing you should do when you sign up for Trade Ideas, and you will get reminder emails anyways, but you should do it right away. Go to the support section, click on training, and pick your preferred time and date. The annual plan includes all of this, except it saves you a bunch of money. It's only $888 a year. Now, the AI channel is a one-time $1,100 cost, and it gives you access to AI, the investment discovery engine. It also lets you access the odds maker to backtest your own strategies and optimize your own strategies without any programming. And that's a one-time cost. You get it for life. So something we like to do to thank everyone for joining us is give a discount code out. And I'd like to direct your attention to your handouts panel on your GoToWebinar interface. There's a PDF right there that you can download with the current information for the specials. That code is case sensitive. It's all caps, Holly16, Holly 16. That lets you try the first month for half off. You can get in for $49 for the first month. Give us a try. You get 20% off your entire first year, so you can come in for a year at $710. It saves you, and then it renews at $888. Or upgrade to get that 30% off your lifetime AI odds maker license. Get that for just $770 lifetime rather than $1,100. And that code is good until Friday, March 18th. So you're going to want to use it before then. Something we've done to make it easy for you to upgrade to both the odds to get the AI and a full year at a discount is put both of them together in a package, and that's the regular price is $19.88. But when you use the codes, the same discounts apply. So you get 20% off the year, 30% off the odds maker. That makes it $14.80 total. It saves you over $500 immediately. This is a fantastic upgrade if you're currently on the monthly plan. Just as soon as you upgrade to this from the monthly, shoot us an email to info@TradeIdeas and let us know that you did that change so we can double check your account and make sure your monthly is turned off. Thank you for joining us. This is recorded, so you get a link to the recording in your email later. Cheers, everyone. Email us info@trade-ideas.com if you have any questions at all. Thanks, Dan. Have a great night.